Investing in Indian stocks. The stock market is a platform that provides traders with an opportunity to exchange financial instruments such as bonds, stocks, or commodities. There are two principal stock exchange markets in India: the National Stock Exchange, NSE, hosting more than 90% of all cash trades in India, and the Bombay Stock Exchange, BSE, handling most of the remaining cash trade. There are also other minor stock markets specific to certain commodities, such as the Indian Energy Exchange, ATX, dealing with power trading, and the Multi-Commodity Exchange Market, MCX, dealing with multiple commodity exchanges. The Securities and Exchange Board of India, SEBI, regulates all activities and participants in the stock markets, including all exchanges and trade instruments, and oversees daily trades. SEBI maintains security in the Indian Stock Exchange by enforcing specific regulations to protect the interest of all investors. SEBI is instituted in the Indian Constitution under the 1992 Act to oversee a systematic running of the Indian capital market and yield a transparent environment for investors. SEBI helps to eliminate malpractices associated with stock exchange markets and thus promotes the development of long-term capital investment exchange. Why invest in stocks? Investing in stock marketing is a long-term business procedure that could assist you in managing your finances. Indulging yourself in stock marketing sometimes appears tedious and risky when you're starting. If you, however, acquire a basic understanding of the stock market, it could ease your way into long-term stock investments. Investing in stock marketing increases your net worth by providing you with a chance to get higher returns on your stakes. It is also an excellent way to nurture financial discipline, where you acquire skills on how to save money and make careful investments. Business statistics suggest that stock market investments register higher returns than standard saving instruments like fixed bank deposits in the last few decades. Although investing in stock marketing seems risky due to stock market fluctuations, careful analysis of the stock graphs indicates that they tend to smooth out after particular durations of time. Also, stock marketing is an ideal way of protecting your finances from the negative effects of inflation and taxes. You also enjoy dividends, boosting your investment income. How to invest in the stock market? As a beginner trader, you can't buy or sell directly on the Indian stock market. You can only go through authorized brokers or use stock brokerage companies that give you access to their platform to trade on. Below is a summarized step-by-step procedure of the easiest ways of investing in the stock market in India. Open a trading account with a broker or brokerage company, the platform permitting you to buy or sell stocks in the market. Get yourself a Demat account. We need the stock market hold your finances, your name on it. The broker or brokerage company you choose is responsible for creating a Demat account for you. Ensure that your Demat account is linked to your bank account. For this procedure, the law requires that you provide your Know with your customer (KYC) documentation papers, including an identity card. Current trends: the market is pushing most brokerage companies to adopt an online digitized KYC procedure, permitting clients to open trading accounts within a few days after submitting and verifying client details. You can now trade with your broker through an online platform. Some brokerage companies permit offline trading through phone calls, where they request your consent to place or buy stakes on your account. Indian and non-Indian residents can participate in the stock exchange market of India. For non-residents, there are two significant ways of obtaining access to the Indian stock market. You can either choose to open an account in an international brokerage company registered by your country's exchange commissions. Citizens of the United States, for instance, can access the Indian Stock Exchange by opening an account with any brokerage firm registered by the United States Security Exchange Commission, SEC. You could also access the Indian stock market, where lancing with an Indian stockbroker could start by SEBI. Both residents of India, I'm free to access the Indian Stock Exchange market. All trading commissions, terms of the agreement, and withdrawal conditions depend on the broker or brokerage company you choose. You could be wondering why brokers and international brokerage companies guarantee a better chance of long-time investments in the stock exchange. The answer to this question is that such brokers or companies have established a presence in the national stock exchange market over the years. They, therefore, have unlimited access to Indian shares, indices, and futures. Accounts with such companies, therefore, guarantee considerable access to the Indian stock exchange market trading instruments. As a client of these brokerage firms, you will be entitled to commission charges and currency conversion rates. Stocks within the Indian stock exchange market acted in Indian currency, and the conversion rates provided by foreign exchange rates apply. Costs to incur in the Indian stock exchange market. Whether you are an Indian resident or a non-resident, you can incur costs before you can reap benefits from the stock exchange. Taxes. All investors in the Indian stock exchange market are expected to pay a percentage of their profit from their investment to the government as tax. Clients who hold their stocks without trading for more than a year must be a 10% tax charged as long-term capital gain tax. The View, however, owns their stocks. They are not amounting to one financial year you are liable to 15% capital gain tax. Although 10% and 15% are at the standard charges for holding stock investments, these rates are susceptible to change over cess or government surcharges. Demat charges. When your brokerage firm or broker opens a Demat account for you, the law does not permit them to operate it on your behalf. Instead, the law demands that all Demat accounts be used through central security depositories regulated by the government to safeguard the investor's interests. Such security depositories include the National Security Depository Limited, NSDL, or the Primary Depository Security Limited, CDSL. These security depositories charge a nominal annual fee to run the account for you. For ease of collection, your broker or brokerage company collects this yearly fee from you. Brokers know all their clients, and it is easier for them to collect the annual fee corresponding to the Demat account they open. The transaction costs. This is the cost that brokers charge to facilitate trade within the stock exchange platform. This cost varies from one broker to the other with the current trend in the market, creating competition that has quickly lowered these costs. Brokers are now competing to offer enticing discounts to the client to improve their performance. Registered brokers within the stock exchange market are also mandated to collect all taxes and dues to the government for every transaction. Therefore, these brokerage companies act as agents to collect security transaction tax, STT, goods and services tax, GST, SEBI charges, and all other charges levied by the government in the stock exchange market. NSDL versus CDSL. NSDL and CDSL are depositories that function as administrative bodies that hold financial instruments, securities, and stocks in a cashless form. Investors place requests to access these financial instruments through a depository participant. These depositories have assets such as shares and bonds in place of money and permit change of ownership of those mentioned above and other debentures through a convenient digitized form. Over the years, the stock exchange market has realized the risk of holding financial instruments in liquid form. Therefore, these depository organizations provide investors with a digitized system of storing stocks that resemble a bank. This function of depository organizations such as CDSL and NSDL has led to a significant drop in the inconveniences associated with handling and exchanging ownership in physical share or bond certificates. With depositories adopting digitized processing platforms, the amount of time taken to process transactions and the cost associated is significantly becoming low. CDSL and NSDL have significant differences and similarities. NSDL keeps electronic copies of bonds, ETFs, another document associated with the transactions in the National Stock Exchange. CDSL, on the other hand, keeps copies of bonds, ETFs and stocks related to transactions in the Bombay Stock Exchange. NSDL operates within the NSE, while CDSL operates within the BSE. Another significant difference between CDSL and NSDL is that the latter is India's first electronic depository system adopted in 1996. NSDL has been in existence for a longer time compared to CDSL adopted in 1999. There has always been a debate about which depository organization to choose when participating in stock exchange in India. Both deposited organizations operate within the same means and do not have significant differences in the mode of operation. They are both regulated by SEB and offer technically similar services to investors within the stock exchange platform. From an investor's point of view, CDSL-NSDL is interchangeable. Therefore, the real question becomes which between the National Stock Exchange and the Bombay Stock Exchange is better. An investor may not have much regard for choosing which depository condition to using since it all depends on which stock exchange they are primarily looking for. Demat charges collected by these depository organizations differ. Therefore, an investor ought to compare the Demat account charges between NSDL and CDSL and determine which is more economical and conveniently accessible for them. Brokers and brokerage companies have the mandate to credit or debit securities in either NSDL or CDSL and can therefore determine which of the two favors them and their clients. Key EFTs. Equity Exchange Traded Funds, commonly abbreviated this ETFs, add investment products with broad flexibility. ETFs are standard exchange instruments in the National Stock Exchange platform. Their prices fluctuate within the stock market, and they mainly occur as passive investment instruments depending on indices mirroring property. ETFs have a transparent and unique structure with lower expense ratios and a simple creation mechanism than mutual funds. Below is a list of appropriate equity exchange traded funds and the National Stock Exchange platform. 1. Edelweiss AMC. 2. Kotak AMC. 3. Birla Sun Life AMC. 4. Motilal Oswal AMC. 5. Assisi Prudential AMC. Non-resident Indian accounts, NRI. Non-resident Indians are adequately accounted for in the National Stock Exchange market of India. Since these people do not reside within India, they have different financial needs, with most of their incomes and investments occurring in foreign denominations. As an NRA, you will require an account suitable to your economic conditions. NRI accounts are available in central Indian banks, providing facilities corresponding to the client's currency denomination, transferability, and taxes. There are 3 significant accounts a non-resident Indian can open: NRE non-resident external, NRO non-resident ordinary, and FCNR foreign currency non-resident accounts. NRE accounts are rupee account existing in savings or recurring deposits and permit the clients to transfer foreign earnings to India. NRE accounts are exempt from taxes and can be easily transferred from one person to the other. You could choose to open an NRE account alone or open a joint account with other people. NRO accounts are specifically designed to accommodate rupees generated in India. It is possible to deposit foreign earnings in these accounts if the Indian citizen she locates abroad. Ordinary resident accounts of such a client are transferred into NRO accounts at the bank's notice. NRO accounts exist as fixed deposit accounts, current accounts, saving accounts, or recurring deposits accounts. Foreign currency and resident accounts permit foreign currencies transactions such as dollars, Japanese yens, sterling pounds, and euros. FCNR account has time deposits for various maturity periods of between 1 to less than 2 years, all the way to 4 but less than 5 years. Conclusions. The Indian stock exchange market is open for both Indian and foreign investors. If you are looking to participate in long-term stock exchange investments, the Indian stock exchange market is an excellent choice for you.